Let's talk about Tesla first, because it is a driver of the market, if you will. I mean, this is a stock that really does have a lot of influence on certain parts of the market dynamic right now. Do you feel as though this downward momentum that we've seen near to medium term is justified, and how much further could it go?
Yeah, there's risk rewards to the name, and so we're still equal weight on it.
Okay, if that's the case for Tesla, is it still best in breed with regard to the EV makers out there? The entire industry, every single one of them, from China to the U.S., everywhere else, has seen some of those publicly traded stocks take a huge hit. Is there a value proposition that eventually comes to fruition because Tesla is, in fact, the best that we have out here on the American side of things, market cap-wise right now, as opposed to some of the EV names perhaps out in China these days?
Tesla does have a current leadership position here. I think in the near term, we're still talking about slowing deliveries. I think from the broader industry, EVs are a challenge, and that was sort of the focus of our report this morning, particularly from a regulatory challenge. And we'll see what happens with, the White House proposed, apparently changes coming to the regulations that are already out there, which are quite aggressive and probably mean more headwinds for the traditional automakers as they're forced to meet them.
Back against the wall. It's still the second, third inning of the Tesla story playing out. Now, I'm not saying that this is going to be rose and champagne, but we've seen it before. Then they get through it. And you're going to be talking about a company that at one point is going to be doing 3-4 million vehicles per year. And I think Kathy's right.
Certainly is part of it. And in survey work that we've done, it does come up as one of the top 3 reasons and pain points of EV adoption today. But EV charging infrastructure, range anxiety, even product availability also comes up in some of the survey work that we've seen. And what's interesting is some of the lowest priced EVs in the last couple of years have not been the most successful from a volume perspective. And one of the really impressive things that Tesla's accomplished amongst many in the last few years is, when you look at some of the third-party data around conquest, who are they actually taking share from? There's a fair amount, more than I think people might commonly believe, of that conquest coming from mass market brands. As you actually see, and that's one of the appeal of EVs, right? With successful EVs have done some pretty incredible things in terms of market expansion and conquesting from segments that are even lower price. But broadly, to your point, yes, price has to come down over time to increase adoption. That we think 9.5% this year can still be done with some modest degree of a price premium relative to the overall market.
Today, we're going to delve into an exciting topic holding immense potential for Tesla and its investors. To understand how huge some recent events are, we're going to explore the concept of Tesla's dominance and why this automaker has the potential to achieve a massive valuation in the future.
For more on what is happening in the EV space, joining us now is Itay Michaeli, Citi U.S. Autos and Auto Parts Analyst. Itay, it is good to see you. And I wanted to get to a note, Itay, you recently wrote here. You're now trimming your estimates for EV sales, both for this year and next, Itay. Itay, why did you make that call there? What are you seeing in the market?
Well, thank you for having me. Yeah, we did trim our estimates recently by a modest amount. We still see EV sales actually reaching about 9.5% penetration in 2024. It close to 15% by 2025. That said, given the slowdown and some of the revised plans by the automakers that we've seen announced, plus I would say a tough start to January, although December we think was actually a very good month. But just given the slower start in January, we did trim our numbers a little bit. I would say our views are probably still above the current consensus thinking, which has been very bearish on EVs the last few months. We don't completely agree with that. There are some adoption challenges out there that's reflected into our numbers, but we still think we'll have a pretty good year for EV growth this year on the back of some new product.
And who do you think is going to be the big winner in EVs? And is that going to then determine who's the big winner overall in sales this year?
Yes, overall, EVs are still a small part of the market, but at close to 10%, we think this year. We do believe, of course, Tesla will remain by far the market leader. Our forecast for market share this year is just under 50%. We think a new product, including the refresh on the Model 3, is going to be key for them this year. Of course, Cybertruck ramping as well. And then General Motors, as they ramp their Ultium platform, we think could be in about 11% market share. So sort of the first non-Tesla automaker with a double-digit market share this year as they ramp that platform. We think we need more product in the EV market. If you look at just some of the market coverage to date, it's pretty uneven in certain segments and certainly in certain price points. And one thing to keep in mind in the whole EV debate that's very important is in the U.S. we have on average about 2 vehicles per household. So the burden of EV adoption isn't about changing one's entire lifestyle to go all in on EV initially. It's really about converting households largely to one, combustion or ICE, and maybe a second one with EV. And if that starts to happen, you could see, in theory, a pretty rapid uptake of EV adoption over the next few years. But you need additional product. Of course, you do need better EV charging infrastructure, lower pricing, which IRA should help to some extent this year as well. So we think structurally the market is probably in better shape than what consensus currently bakes in.
And Itai, you mentioned pricing. Is that, in your opinion, is that the biggest challenge for adoption right now? I ask because if you were in the market, you're looking for an EV, let's say around $35,000, Itai, there aren't that many options. Do you see that changing, though?
Tesla's position in the market is not just about managing costs and prices. The brand has established itself as a leader in the EV space, even though it faces increasing competition. And because of this, investors are particularly interested in Tesla's strategies for maintaining its market dominance, managing production and operational costs, as well as its roadmap for future growth and innovation. Tesla is a company that's revolutionized the automotive and energy industries with its innovative products and vision. And for this reason, its global dominance is relatively undeniable. In today's video, we're going to explore how Tesla has unlocked a new level in its money-making game, as well as how you can benefit from this as a Tesla investor.
Today, Ford EV owners will be able to access Tesla's supercharger network with the use of an adapter. Yahoo Finance's Pras Subramanian checked it out firsthand and joins us now for more. Pras.
Yeah, so a year ago, shocking news when this was announced, when Elon Musk went on Twitter Spaces with Jim Farley and they talked about this deal. And now here we are with today's the first day you can actually use an adapter. So I went to a location in New Jersey here with a Tesla supercharged location, and they provided a F-150 Lightning here for me to test out the process. So the actual adapter itself, and I have some video of that. It's actually made and is engineered, designed, and made by Tesla for use with this vehicle. And basically, what happens is you plug it into the Tesla charger, and now you have the ability to plug that plug into the F-150 or the Ford EV, and it immediately starts charging. There's no app. There's no I got to set up my thing. I got to type this in. I got to find the charger. No, just like for Tesla, it works seamlessly for Ford, and that's really a nice thing because once you have your account set up in the Ford Pass, it's all good. It seemed relatively easy to use. Nice heft there with that adapter. And look, it's going to make it's an advantage for Ford being the first automaker to use this, to be able to access this network. I think it's a competitive advantage that a lot of people are going to want to actually consider when they don't want to buy a Tesla, but they want to use that charging network.
To go back to something we were discussing with our Akiko Fujita yesterday, what about the time it will take to charge a Ford, and is it different from the time it'll take to charge a Tesla at the same station?
Tesla's got strong brand recognition and reputation, with about 81% of its sales coming from word-of-mouth referrals. The automaker has customers who are not just buying cars, but also joining a community of like-minded people who share Tesla's vision of creating a better future for humanity. Tesla has become synonymous with electric vehicles, pioneering the industry and capturing the public's imagination. And it's evident that with the automaker's unwavering commitment to sustainable energy and a laser-focused approach towards innovation, that the car company's been consistently pushing boundaries and it's been setting new standards too. Hey guys, welcome back to Tesla Tomorrow. Tesla recently announced that it's opened up its supercharger network to NACS-committed automakers. The rare agreements between Tesla, Ford, and GM have given top billing to Tesla's North American charging standard, and that puts charging companies in danger of losing out on customers if they offered only combined charging system. According to Asaf Nagler, Vice President of External Affairs at ABB eMobility North America, there is tremendous interest for the unit to start integrating the NACS connector into its chargers and units. And with its arrangement, there's so much that Tesla can achieve. And we're going to explore that in just a moment. But before we carry on, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. The NACS is the most common charging standard in North America, and with more than a decade of use and 20 billion EV charging miles to its name, The Tesla charging connector is the most proven in this region, offering AC charging and up to 1 megawatt DC charging in one slim package. It's got no moving parts and is half the size and twice as powerful as the CCS connector. Tesla's market dominance and innovation sets it apart from other automakers. For instance, the car company recognized early on that the lack of charging infrastructure could hinder the adoption of electric vehicles. And as a result, it made a decision to develop an extensive supercharger network, which has been instrumental in addressing range anxiety and encouraging EV adoption.
Across the automakers, I'm looking at the reporting again. 7 of Tesla's 12 models sold in the U.S. fully cleared the IRA's sourcing hurdles and qualified for the tax credit. What percentage of EVs being sold in the U.S. are clearing that hurdle?
I think because Tesla is still so dominant in the U.S., we're at a point where the EVs that do the most volume are largely qualifying at the moment. But I think the fact that those raw material requirements that kick in next year and then escalate in the years that follow, that's really where we're going to see even more of a sort of level of screws put on the industry. But I think the other car maker that I think is particularly well positioned, I'll call out to General Motors. I think the fact that they have a localized supply chain for batteries, they have a joint venture with a Korean battery supplier. We're seeing more and more of those partnerships. Ford following suit, Stellantis, the maker of Jeep, and Chrysler. Similar deal where they're setting up battery plants in North America and sort of on and on. But those projects, I would say, are much further behind where we have Tesla, which for years has been making batteries out in Nevada with Panasonic, and GM, which has a partnership with LG in U.S.
Hey, Craig, I think the narrative out there, just kind of the bigger picture on EVs right now is, maybe demand isn't as high as we all thought at one point. We've got, the big auto manufacturers pulling back, like Ford, for example. Loss is still big. What's your understanding when you talk to your sources as to how people are thinking about the ultimate demand for EVs over the next 1 to 3 to 5 years?
I think, perversely, it was a challenge that, for a time, business was too good. The fact that, for a while there, so many companies, actually had back orders. Tesla in particular, had demand issues as opposed to a supply issue. That, really sort of caused this, unsustainable, jacking up of prices. The fact that has had to come down, I would say, more dramatically than we've seen for the rest of the industry has had all sorts of, unintended consequences when you, so dramatically bring down prices on the new side. The used side is of the equation. The used vehicles really lose their value. And the fact that I think EVs maybe have some sort of, particular challenges with, maintaining their value. When you think about a used gas car, you don't worry about, the engine holding up. You maybe have, relatively more concern, rightfully or not, as to whether or not the battery is going to hold up. And so what we're seeing is that really come into play in terms of total cost of ownership. I think that's one of the things that we've really paid close attention to lately. I think when we step back, the fact that EVs is sort of, the way forward, particularly in terms of, where the regulators want to see this industry go. I think we've seen that China is able to make this work. We've seen that Europe is much further along in this transition. I think the question for the U.S. is whether we can sort of, get Americans who tend to like bigger vehicles to come around to electric vehicles. I think that also adds some complications to the mix as well.
One of Tesla's key strategies in holding a significant portion of the EV market is with its diverse and compelling product lineup. From the Model S to Model Y, each vehicle showcases Tesla's commitment to performance, range, and unparalleled driving experience. The truth is that Tesla's brand has become synonymous with electric vehicles and cutting-edge technology, and the automaker's ability to establish a strong and aspirational brand image has played a crucial role in attracting a loyal and ever-growing customer base. Luckily, despite the recent dips, Tesla stock is beginning to recover, and many stock investors and analysts are hopeful that the EV maker will eventually outperform the market. Tesla has been in the EV business for years, and during that time, it's expanded its markets and increased sales through improved technologies and scaling of its revenue. So, with the current and expected trend in the use of EVs, think of what the future could be like for EV company stocks, especially Tesla's. Several experts have said that Tesla's creation of a vast new EV charging business will be a massive boost for its valuation in the near future. The car company has taken the bold step towards building its own network, not to turn charging into a profit center, but rather to reassure buyers that they could get access to the country without running out of power. Now, this charging business is starting to boom, and it could become a significant revenue source for Tesla. In fact, a recent analysis from investment bank Piper Sandler found that in about a decade from now, Tesla's efforts to open up its charging network to other car manufacturers could generate the company upwards of $5 billion in revenue annually. Likewise, Jonathan McNeil, a former Tesla executive who now sits on GM's board, said that this is a bit of an AWS moment for Tesla. McNeil claimed that Tesla is taking something that's been a cost burden for them and now turning it into a source of revenue. Many of the analysts who share this thought are very optimistic about the EV market's future, and this will be of great benefit to Tesla since it's a leading electric car company and has a wider market share compared to other EV makers. The automaker already has a high demand for its electric cars, and it may have even more to come with its crazy fleet of vehicles all collecting data. Tesla is training its AI algorithms by iterating towards full autonomy, an innovation that's got the potential to revolutionize transportation.
What you have here is a situation where, Joe Manchin was the player who, Washington really just had to sort of bend to his will. And he was really reluctant to, allow for electric vehicles to continue to get tax credits. He was opposed to them. And he said, okay, industry, we'll give you these tax credits, but you build me a supply chain. That, of course, sort of didn't take into account sort of, the complexities of the supply chain and the fact that China is just so dominant in this space. And they've really sort of, methodically, for a time quietly, built this, staggeringly strong position in terms of, the control of, the inputs, whether it's, nickel and lithium, graphite, these inputs are going to be really, really difficult to source, not only just, whether they're mined in China, but whether they're sort of processed and refined. And, the sort of cost difference that the West is going to have to sort of overcome really just can't be, sort of overstated at this point.
And folks, if you want to see this article, it's a fantastic article, really deeply reported, great graphics, makes it easy for me because I like the pictures. Bloomberg.com/big take is kind of where you find it, big team effort. So, Craig, I see in your reporting here, in 2023, the IRA required that at least half of the value of battery components had to be assembled in North America, and that 40% of the raw materials had to be sourced from the U.S. And in 2027, that raw material requirement is going to double to 80%. Are those numbers, can they be achieved in that time frame?
I think that's one of the things that, it sort of depends on which company you ask. And I think, some of the concerns that the industry is having here is the fact that some of these raw materials, the prices have really collapsed. And, that you would sort of think, oh, that's a good thing for the auto companies. But if you're trying to build a supply chain in North America for these raw materials and the prices for them have absolutely, sort of the bottom has come out. I think of lithium in particular, you've seen just this dramatic, drop in prices that significantly undermines the economics of those projects. And so, I think the raw materials in particular are a real challenge. I think battery components will be less of a challenge, but even there, it is, a matter of you can't just sort of snap your fingers and open up a bunch of plants for these various components. It does take time, to put, dig up the ground and put up these plants that are coming, but are taking some time.
Tesla has a growing demand for its battery products, but both of these come from its electric vehicle productions, and its external customers. For instance, its electric vehicles are powered by proprietary battery packs offering high performance, range, and efficiency. Tesla also sells those packs to other automakers and has BESS products, including Powerwall for home use, Powerpack for commercial use, and Megapack for utility scale use. So it's obvious that the EV maker still has a lot going for it. No doubt the recent weeks have been tough for Tesla, and stock prices have also been in a bit of an upward and downward trend lately. However, Tesla's stock value recently seems to be scaling in the positives, and it's not surprising owing to the many efforts to ramp up production. Now, we think these positive trends could lead to many old investors reconsidering selling their shares and new ones to then join the train. You see, Tesla's been a leading electric car company for years, constantly thrilling the industry with amazing innovations, and it's still got a lot more to come. And despite the various market challenges, the car company's managed to soar above any of its competition, in incredible ways too.
As we increasingly look at Tesla, almost more so as a tech company than a car company here, what does that mean in terms of expectations for next year and how it's positioning itself?
Well, you know, they've got the Cybertruck coming, which a lot of people would love to think is going to tap into this highly profitable, massive volume truck market that Ford and Chevrolet and Dodge and Ram have been benefiting from for decades. I don't know if that's really going to work because the truck is very expensive and it looks like it's not very profitable for them, and it looks like they're going to take a while to ramp production. So I feel like they're not going to just be this natural. Plus, we've seen a lot of people in the truck market kind of pull back on buying these trucks. When they started using them as real trucks, they didn't seem as attractive. What I would say is kind of Tesla's ace in the hole, or ace in the PowerPoint maybe, is the supercharger network. That was a brilliant move for Elon to invest in that. Now we're seeing all the other car companies transition to the plug type that he's got in that supercharger network, and he's starting to open it up to other companies and other cars. He could end up with quite the subscription model if he becomes the dominant player in the infrastructure and power supply field.
Tesla's market position and strategies are pivotal to understanding its financial health and future prospects. The company's approach to pricing, production costs, and competition reveals much about its potential to maintain its lead in the EV market. Also, Tesla's pricing strategy has a lot of things that need to be paid attention to. It's a bit of a double-edged sword that has the automaker choosing to engage in this war of EV dominance. These cuts aimed at making Tesla vehicles more affordable have been a strategic move to capture a larger market share, and they were instrumental in boosting sales volumes, even though they impacted margins due to a quick decline in average selling prices compared to the reduction in production costs. However, despite all this, Tesla's shown resilience, adapting to its pricing strategies in response to market conditions and maintaining a competitive edge. The production cost dynamic is crucial. Tesla has continuously strived to reduce these costs through technological innovation and efficient manufacturing processes, which means that the challenges lie in balancing these reductions in pricing strategies to ensure profitability. And so in the end, Tesla's strategies and marketing position all have revealed its earnings reports, as well as a comprehensive picture of the company's health and ability to sustain its growth trajectory in the face of intensifying competition and challenging market conditions. For Tesla, the focus will be on its ability to stay ahead, and this hinges on its continuous innovation, expansion into new markets, and the development of cutting-edge tech like autonomous driving and battery efficiency. Do you think Tesla should be opening up its battery charger network to other automakers? And how do you expect this will affect its valuation? Let us know down below, and for more updates on Tesla, go ahead and click on this next video on your screen. See you there.